loaded, most certainly. Yeah, I get it loaded. You just ride the play. If you ride the way, shawty ride the.
What is going on in this video? I'm actually going to show you a nice little 1-minute strategy that you guys can use just strictly using market structure and simple price action analysis. So make sure you guys watch this video because like I said, I'm gonna give you guys all of the little secrets on what you need to do to apply this, and we're actually going to be using this on NASDAQ 100. So I'll show you guys how powerful this is with indices. So first and foremost, guys, before we get started, I want you to make sure you of course have TradingView, and then also what we need is the indicator, which is an order block finder. Now, the order block finder, all you need to do is come to indicators. It is a free indicator on TradingView. You come to indicators and you just type in order block finder, and then from there you will select that. Now, once you select that, there are some settings that you do want to go ahead and change. Here are the basic settings that we're going to go with. The color scheme, you can leave it to whatever you want to. So the relevant periods will be set at 3, and then we're also going to do the minimum. Percentage move, we're just going to leave that at 0, and then everything else is unchecked except for the top 3, or the second one and the third one. So we're going to go ahead and select that, and then now we're going to go ahead and hit OK. All right, so here we have the order block finder. Now we are basically going to use this to apply with structure. For those that's looking for that perfect 1-minute strategy, this can definitely help you out because we're applying structure and price fundamentals. So let's say that we notice that our order block finder prints out what we call a bullish order block and a bearish order block. A bearish order block is basically telling you that is what we call a support or resistance area. If we notice that we spot a bullish order block, we are looking for a support area, you can call it supply demand area, and so forth. But what we're simply going to do is this. If we notice we have a order block printed, which we do here, we're just going to simply wait on structure or price to tell us otherwise that we can buy. If we see something like wick rejections, that's fine. But before we get in the market, we need to start to see bullish sentiment telling us that the buyers are in the market, and we can start looking for these buying opportunities. Now, guys, here is this sheet. I kind of want to show you this first before we continue on. So let's say we start off with a standard $500 account, and we're looking to do an increase of just 5% on our account. Guys, if you stay consistent with just looking for a 5% gain per trading day, you are literally able to get to about $10,000 and I would say roughly about 2 to 3 months if you just stick to just 5%. Now, 5% might not sound like a lot, but I just want to prove to you guys how crazy 5% is. Now, let's say you had a funded account and you actually had a 200K funded account. Guys, 5% on a 200K funded account is $10,000. So if you had a funded account and you were doing 5% on that, guys, you are making pretty much $10,000 for probably like that first week. And then once that account grows, that 10,000 is going to be 13,000, 14,000, 15,000, and so forth. So 5% is a big number, and you might not know it because you have a small account, and I get it. But if we even have, let's say, a funded account, and if you're watching this and you do have a funded account and you want to try this 1-minute scalping strategy, here you have it. You got 5% right here, and you guys are pretty much able to use this to your advantage. So let's go back to that $500, and we're just going to stay with 5%. Now let's come back here and look at the actual order block finder, see how we can master this. Now, first and foremost, if the market or the order block is printed green, we are looking for buying setups. If the market is printed, or if the order block prints red, we are looking for selling setups. Now, typically when you get a green and a red in the same area, that tells me that we're either going to expect a reversal or we're just going to be in heavy consolidation. So what we're going to simply do is wait to see if market is going to react off of this order block here. And if it does, we want to start seeing some type of buying power. If not, then we're just going to wait. So at this moment, we're not taking any type of opportunity. So let's go ahead and see what happens. So as you immediately see, we have this strong bearish candle that shot straight down and past this order block. Now, since that's the case, we're just going to wait to see if we can get a new order block printed. Now, here's another rule. Only way I will take a sell right now is two things. If there was no order block printing around the area when price starts shooting down, I need it to pull back around here, and then I will be then looking for some selling opportunities. Otherwise, I am still not interested in anything until I start seeing something happening. So we just got an order block printed right here. So now since we got this order block printed, what I am basically going to do is wait on price to pull around this area, because now this area is what we call structure. Now since we have structure, I'll wait for it to pull around this area, and once again we're on a 1 minute time frame, and then once I start to see that the sellers are in the market, we are going to go ahead and take some selling opportunity. Now we are starting to see that we have sellers coming in the market, and then now we also notice that we got this other OB printed. Now typically when you guys have something like this, you're going to get a lot of this, especially with the settings I have and being on a 1 minute. But I always say, if you have the bigger the order block, meaning the bigger the range, the better that opportunity is, because in theory, basically with market structure, how it is if you look at this as structure, which it is, it's an order block. This is what we call minor structure. So usually minor structure is very powerful, but it only respects it for a certain amount of time before it breaks. So I will be pretty much possibly looking on market to hit here and maybe shoot around this area again, and then we're going to go ahead and take another buy or another sell. So two things we can do here. We can go ahead and already get it in a sell for a short here, and we can put our stop loss. Usually I like to put my stop loss just above the order block, and then I like to ride it. Two ways we're going to ride this. One is I like to use my Fibonacci to figure out the next T piece, and that's what we're going to do. So how I draw my Fibonacci is I started from the beginning of the impulsive wave to the end of it, and wherever my -27 or 618 is, I just take it to here. So this is going to be my first TP, and then now this is one way to enter as an aggressive trader. The other way to enter is we can wait on market to possibly come back and then give us a double top. And if we do get that, that is even better for my normal traders, meaning you're not an aggressive trader, because we can still get stopped out. And if we do, that's fine. I'm gonna still look for a better entry. So let's go ahead and play this through and see how this trade plays out. As you guys see, we are slowly here. Let me go ahead and print this because this is where it was at. One thing about the order block, it doesn't stay with the red lines and the green lines. So I usually like to just highlight it over with some type of tool. My rectangle tool, I usually do that. But usually when, as you guys see, we still technically haven't hit TP yet, but just considering that we are still in this consolidation, I will usually just TP, but we're just going to stick to this simple rule and apply the simple rule. Now, one other thing is market never actually came back to create what we call a double top, and sometimes that happens. If that happens, guys, don't get discouraged and feel like, oh, I should have gotten this trade, because you should not be taking every single trade. And if you feel like you need to, you already know how that goes. You're going to overtrade and you're going to lose money. So simply just stick to the rules. And also now, if you guys pay close attention, we have another bearish order block printed here, as well as one printed here. Wait, before we continue, I want to talk about today's sponsor, which is Margex. Margex is your one-stop shop to trading cryptocurrency. Let's say that you are just only interested in trading cryptocurrency and you just want to have everything all in one inside the platform, where you don't have to go to different brokers or you don't have to go to a different platform to mark up your charts, but you could do everything through Margex. Well, Margex is pretty much where it's at, because you are able to leverage trade. Now, when you come in and sign into Margex, you are able to start trading right away with different cryptocurrency options. Now, if you look here on your left hand side, you pretty much have everything you need to get the process going. Like I told you before, this is leverage trading. Leverage trading, you are able to quadruple your money to X amount of dollars, depending on whatever leverage you set it to. So if immediately before you get in the trade, you are able to quickly come on the left hand side and change your leverage all the way starting from 5x all the way up to 100x, which is a beauty of that. Now let's say that you are looking to put in an order for Bitcoin. You can simply come in here, and let's say you want to put in an order right away. You will simply select market, and then if you are thinking that the buyer will come in for Bitcoin, you can come in and just say buy. Or let's say that you think for whatever reason some news are going to happen where everybody's going to short and sell their crypto, you can immediately hit sell market. Like I said, guys, you can pretty much make money when the market is going up, and you can make money when the market is going down with 100x through Margex. Now, when you come to the wallet section, you're actually able to purchase cryptos through a debit card, Visa, or through a MasterCard, which is by far one of the best things you can do. And then also, let's say you already have a third-party cryptocurrency wallet, you can send that directly to here and start trading right away. Now, depending on what you guys deposit into your actual Margex account, you can come right back here to the main trading platform, and right where you see up top, you can actually switch it to whatever you had did. So let's say you put in Ethereum, you can change it to Ethereum. Let's say you put in some type of stable coin, you can change it to Tether, or you can change it to USDC coin. Or let's say you decided to put it into something else, Tron or whatever it is, you can select that and you can actually start trading with different currencies right away. Now, if you guys are interested in signing up, it is a very simple process. And also, just for watching this, you are able to get a 15% sign-on bonus when you deposit $300 or more into Margex. How you will want to simply do that is you will want to create your account, come to the wallet section, right where you see use promo code, you want to select that, and then you will enter my promo code, which is uppercase solo E15. Once you hit that, you hit confirm, and also from there you guys will automatically get credited that bonus that you have put in, which was the solo E15. So like I said, guys, if you want to get started with Margex, you can right today. It's very simple. Everything is integrated in there. They have TradingView already in there for you to start marking up your charts. And like I said, guys, go ahead and use the promo code, and let's get back to the gems. So what we're going to do is see if we can get some more selling momentum, and I thought that would have been one, but it's not. I think this end up being some type of selling momentum here. So seeing this engulfing candle here, we can now look for another opportunity to get in for a sell. Now this one, I will honestly say draw it from your previous high to your low. So the previous high is technically this here and this here. So what we can do is draw out our fibs from this area here to this area here, and then we can take this trade too. Now this trade is also going to be considered very risky, as well as risky, basically a very aggressive trade, because we're not waiting on a double top. But I just want to show you guys that if you are an aggressive trader like me, this still will work and you are still able to make money. So as you guys see, we can basically take these, we're still in these two trades, and then that one trade that we did take, the second trade that we got in, we end up hitting TP. And then we end up, let's see if we smash it. And we end up finally smashing TP for the other trade. So now that we have two winners, let me go ahead and show you guys again that we still can keep going on with this. We can still keep trading this trade, honestly, or keep trading this, because once again, we have another bearish order block printed. And then what I am going to do is simply draw out another rectangle area around here. And then guys, like I said, if you notice that you get a bullish order block and a bearish order block printed at the same area, usually you would get heavy consolidation. So unfortunately, I kind of missed out on this, but if I wanted to take this trade, I would have had took the trade here, drew my stop loss, or drew my Fibonacci from the previous high to the previous low, which is from here to here. And then wherever these levels are at, I usually like to take it to this -27. We can go ahead and do that. So let's go ahead and play this trade out real fast and see how this one plays out. Stop loss, I am going to put it a couple pips away from my order block, and as you guys see, it smashed. Now we also got another order block printed, which was this one right here. And honestly, guys, this one really didn't give me anything interesting except for this engulfing candle here, which I could have got in here. And then how you will want to draw this one is very simple. You still want to start it from the previous high to the previous low, which is here. This is how you can use this. I want to show you real fast how this works in consolidation, because this definitely does work in consolidation on a 1 minute time frame. All right, guys, so here we have it. We are currently on a 1 minute time frame looking at consolidation, and I just want to show you how powerful this tool is still in consolidation. Now when you are in 1 minute consolidation, it is really small. When you're in a 1 hour consolidation, it's pretty big. When you're obviously in a daily consolidation, it looks very big depending on what time frame you're in. But since we're in a 1 minute consolidation, things can get very tight with the entries and the stop losses. So I usually say sometimes try not to get in too much trades when you're on a 1 minute in consolidation, because once again, like I say, 1 minute is already a very tight time frame for you guys to enter and exit. But we're going to see if we can still get some wins from this trade, and most likely see if we can get some pip gains from this actual consolidation using this method. So what we're going to do is same thing, guys. We're waiting on an order block to print, which it did, and I'm waiting on some type of selling power. Now, how I will draw out my fibs is once again draw it from the previous high to the previous low. And if we look here, this is great that it does align with the previous structural level, which is all it is here. As you guys see, my 2 Fibonacci points aligns with this previous order block. So I can actually get in a trade. That's only if I start to see seller momentum And then I do honestly, which is right here, which is this short position here. But considering, guys, how my stop loss would be, I would love to have my stop loss here. And seeing that this is not even a one-on-one trade for me, definitely tells me I shouldn't even be taking this trade. So like I said, guys, it's kind of a bigger risk if you are in consolidation. Now, yes, you can move your stop loss tighter. Maybe you can move your stop loss to that wick, or let me say the opening or the close, depending on which way it's going. But I usually say just wherever the close or the opening of the candle is, just have your stop loss roughly there, and then you can ride your trades to one of these two TP levels. Now, personally, I always try to at least go for a one-on-one, and seeing that this is still not a one-on-one trade to me, I'm not really confident in this move, but it still end up hitting TP for you guys. So that kind of applies. Now here is the same thing again. Nice thing about being in consolidation is that you do expect market to go up, go down, go up, go down. So I'm seeing right here we have the exact same thing. We have a bullish OB. So let's say that we wanted to play this one through. We need to start seeing bearish momentum, and we clearly got that here. So then now with this instance, this is going to be a little different, a little tricky, because if you look left, we don't have any previous data to use our Fibonacci. So what we have to use is the previous resistance or support level. And how you can go about that is very simple. Wherever you see a bearish, the most recent bearish order block finder printed at, you can just take your TP to that level. So let's say maybe we took a TP here. Let's see how far out this would have been. Stop loss is a couple pips out from the order block, and we taking our TP around here. This is a perfect one-on-one trade. We can then see we got stopped out. Now, if we get stopped out, like I said, is that a bad thing? That is not. Like I say, sometimes when you are in heavy consolidation, especially on a 1 minute, things get very tight, very tight, very tight. So I always say, if you are looking to consolidate or look to get in trades for consolidation, try to go with the trend. And what I mean by that is sometimes you're in consolidation, but the market does trend. For instance, how we spot this trade right here, we got in this opportunity, or we could have gotten this opportunity. It was obviously printed what we call a previous high and a previous low here. So we was able to use our Fibonacci to figure out where the next impulsive wave can end. As far as this one, we couldn't really establish that because we were just trading off the order block. So guys, like I said, there's ways to this to really finesse NASDAQ 100. And you guys know NASDAQ 100 is very, very, very trendy and very volatile, so you can definitely catch a lot of pips and so forth. So guys, if you have any other questions, make sure you comment down below. Otherwise, I appreciate the love and support. Make sure you check out the links for more Solo E and Solo Network. And other than that, guys, I appreciate it. Take care. See you in my next video. Peace.